Hey everyone, it's Louisa here, and today is Wednesday, April the 2nd. It's non-farm payroll week, which is not my favorite week. So I wanted to take you through the setup that I took this afternoon, and I kind of waited all day for this setup because I missed the morning price rush up. Price really zoomed quickly and I was unable to get an entry, so I waited for this afternoon for a reversal. I did take a couple of trades earlier today thinking that the reversal was about to happen, and I was faked out, which can happen. And so anyway, I wanted to share this particular trade with you. One of the challenges that I have as a trader, obviously I have many, but one of the challenges that I have is remaining in a trade because those are the types of trades. I like long trades. I like 100 points. You know, I like a minimum of 40 points anywhere to like 150, 200 points. And I'm trying to find ways to be able to flex that muscle to stay in the trade. I see a lot of the more mature traders really taking those kinds of days and taking home big profits. And that's really what I'm after. I don't mind scalping from time to time, but I think that my interest is in trying to identify the manipulation, the point of manipulation, and to enter the trade there and then take a large portion of the day's price action. So if you don't mind, I'm going to take you through the trade this afternoon. It was 143 points. It was a reversal. And anyway, I'm kind of happy about it. I had some moments of doubt, but you know what? That's probably never going to change, is it? So, okay, I'm going to share my screen and let's go through it. So we can see, I'll take you down on let's start on the higher time frame here. This is the 1 hour time frame. This is the NQ. And for this week, we can see here, Monday, price started down here, and then Tuesday, we trended up. Wednesday, we came for a slight pullback, and then Wednesday morning struck, price was off to the races, and there was just nowhere to jump in or nowhere that I could see that would be like a safe trade. There was a key level on my chart that I was watching this morning, and it was 19,603. It was this line right here, this dotted red line. This is on the daily chart. We had rejected here 3 times. It acted as price had come here 2 or 3 times before and had moved up, and so when price was coming to this area, this was an area that I was curious to see whether price would reject or if we would break above, come back and retest, and then move higher. And the latter did indeed happen. Price hit here, we moved up, we came back for a retest, and well, it looks like Trump is speaking right now because it's 416. The other important thing to note on this chart is that I took this leg with my fib, and so from the top of this to near the bottom, I'm not going to count this wick, but I'm going to count here, this candle here. I took the 50% range, and this is the second red line that I have here. So I thought if price is going to turn around, reverse, it might turn around somewhere in this vicinity, and then failing that, I also have my 62 to 79% optimal trade entry area right here on the chart. So those were the 3 key areas that I had marked on my chart today. And let's just go down to the 5 minutes so we can take a look. Here's the 930 vertical line. This is where price opened. And before price opened this morning, we can see that Asia ranged, London also ranged. Here's our accumulation, manipulation, and then distribution. So I missed the distribution. And again, there wasn't really a clear entry point for me. My dog here is trying to get in on the video. But this is the area here that I took my trade. Let me just make it kind of as big as I can make it, because I think it's hard to see sometimes in these videos. I sometimes find that the afternoon trades have been starting earlier than 2 o'clock in the afternoon. And so the rejection started at approximately 110. This candle here is 120, and I entered the trade at about 130, 125. This is the candle that I entered the trade on. So let me make this bigger. Price passed through the 50% range, 50% of the current leg. And so I was anticipating either a reversal sometime soon, or I was expecting price maybe to even come up to the 62 to 79%, which is the optimal trade entry level. This green area here is a 15-minute BISI. And so this is an area with a lot of liquidity. So as price came up, it wicked. We were just under the 50% of this BISI, and price rejected. But when the fair value gap formed, and let's just move down maybe to the lower time frame here. So price was moving down and created this fair value gap on the 5-minute, because I entered the trade on the 5-minute. Let me take this off. So I entered on this candle here. And I believe, let's just take a look, I believe it was at the top of the fair value gap, so it was a nice entry. My dog is playing with his crazy toy. Yeah, so it was at 19,807. I entered with 2 contracts, micros, and my terminus was, I was thinking here to come down to the daily equal lows, basically this wick here on this candle. So price came down. I stayed in. I just wanted to give it enough opportunity that if it wanted to drop below there, it might. It didn't. It started to reverse here, which kind of makes sense. So I exited at 19,664 with both contracts. And so that gave me 143 points on 2 macros, or a 10 RR. I think it was just less than a 10 RR. My stop loss was just above this fair value gap. So it was it probably would have been safer if I had put the stop maybe even at the top of this wick or here. But anyway, I just felt pretty certain that price was ready to drop, just given the time, and that we had tapped into almost the 50% of this BISI here. So anyway, just wanted to share this trade with you, because I'm sure there's other people out there, other traders out there, who get frustrated when they see a run up in the morning and they're not able to jump in on the trade. Like, it happens to me all the time. My specialty are reversals, and from time to time I'm very careful about my reversals. I give them enough time to develop, either through an order, a breaker block, or a unicorn. But today I didn't. And when I just saw that fair value gap form, I just thought, I think price is ready to drop, and I'm just going to take this trade. So I was really pleased. There were moments in the trade that I, thought about pyramiding out, but I only had 2 contracts on the trade. So it was, this is my strategy. How I'm learning to flex this muscle of staying in a trade longer is by decreasing the number of contracts that I take, and trying to be, nonchalant about whether the trade works out or not. I'm trying to be detached. I'm practicing detachment. So anyway, it worked out. I managed to stay in the trade. It was 143 points, and I was pretty happy with it. So anyway, I hope you've gained something from this video. If you have or are struggling with the same challenge in terms of staying in the trade and not exiting too early, if you have any ways of dealing with that you have found helpful, I would appreciate if you would share in the comments below with me, because I'm sure I'm not the only one. And I certainly would appreciate if you shared any strategies with me. Okay, everyone, I hope you have a great evening. Thanks so much, and I'll see you next time.